Welcome back to Peaceful Investor. My name is Ricky, and this channel is all about long-term thinking, disciplined investing, and building real wealth with a calm and peaceful mindset. Before we start, a quick disclaimer. This video is for education purpose only and not a financial advice. Always do your own research or speak with a licensed financial advisor before making any investing decisions. Now let's get into it. The past few weeks have been intense. The S&P 500 has dropped around 5% and the Nasdaq has taken a sharp hit as well. And the tech just had its worst week since April. And what's wild is that all this happened right after the five megacaps Nvidia, Meta, Google, Microsoft, and Amazon all reported strong earnings and beat both revenue and EPS with outstanding fundamentals. But despite that, the entire market sold off. And as a long-term investors, we don't see this as fear. We see it as blessed opportunity because these are the moments when the very best companies in the world go on sale. When your horizon is 5, 10, or 20 years, pullbacks like this are not moments to panic, they are moments to accumulate quietly while others react emotionally. So in this video, I'm going to show you exactly why by breaking down the right way to value these mega caps, not with PE ratios or free cash flow, because these metrics get distorted during heavy AI and CapEx cycles, but with operating cash flow, which reflects the true strength of the business and gives us the most accurate picture of whether these companies are expensive or if the market is actually offering some of the best buying opportunities of the year. Starting with Nvidia, the stock trades around $178 with trailing 12 months operating cash flow of about 83 billion, giving it a price to operating cash flow of 53 times, which is definitely not cheap, but Nvidia just delivered an unbelievable 62% revenue growth in this quarter and even guided for an even stronger next quarter, showing how massive the demand is for their AI chips. With that type of hyper growth, I would say Nvidia is fairly valued for such a high growth company. But the risk is clear. If this growth slows even slightly, these high multiples could hurt the stock very quickly. So Nvidia is priced for perfection. Moving to Meta, the stock trades around $594 with operating cash flow of roughly $108 billion. And Meta posted a strong 26% revenue growth in the recent quarter. Its price to operating cash flow sits at about 14 times, which is noticeably lower than Meta's typical historical valuation range. Combined with the fact that Meta has dropped more than 25% from its highs, these makes Meta, in my opinion, the most attractive mega cap right now. An incredible business and temporary discounted price. And then we have Amazon trading at around $220 with about 130 billion in operating cash flow and a price to operating cash flow of roughly 18 times. Amazon has fallen nearly 15% from its all-time highs. And with AWS growth accelerating, retail margins improving, and Amazon becoming the true cash flow machine again, this stock became my second highest conviction pick among the mega caps during this pullback. Let's talk about Google, which trades around $299 with trailing operating cash flow of roughly $151 billion, giving it a price to operating cash flow of about 23 times. It's not as undervalued as it was a few months ago, but when you look at the entire business, search performing flawlessly, YouTube's growth accelerating, Google Cloud expanding rapidly, and their AI ecosystem strengthening every quarter, This valuation is still cheap when you consider the long-term durability and the growth potential Google holds. And then we have Microsoft trading around $472 with about 147 billion in operating cash flow. A price to operating cash flow roughly is 24.29 times. While this isn't deep discount, it's still a fair value buy when you look at Microsoft's consistent growth in cloud, enterprise software, cybersecurity, AI infrastructure, and its dominating positioning across nearly every sector it touches. So, my overall ranking today is number one, Meta, the most compelling valuation. Number two, Amazon, strong operating cash flow and healthy pullback. Number three, Microsoft, fairly valued with consistent long term growth. Number four, Google, still cheap relative to the strength of its business. Number five, Nvidia, an incredible company but priced for perfection with very high expectations. When the market gives you fear, but the fundamentals of the world's strongest companies remain solid, that is when long term wealth is built quietly, patiently, and with discipline. Let me know in the comments which mega caps are you buying during this pullback. And if you find value in this analysis, make sure you like, subscribe, and follow me across YouTube, Instagram, Facebook, and TikTok. All links are below. This is Ricky from Peaceful Investor wishing you clarity, discipline, and a peaceful investing journey. Thank you.